Howdy, hotshots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. Alti had a bang up week, all right? Our distribution was up a little bit. I was able to get more shares, even though it was a higher price than I was the previous week, because our distribution was quite a bit higher. So I was able to pick up 57 shares in my main account, which just increases my income week after week every time I put money into that by reinvesting. And I'm actually in the green. I did the math and I'm actually in the green. I'm $23.71 in the green, which is 0.09%, but I'll take it because we were in the red there for several weeks. So we're working our way back up, assuming that we can have a few good weeks. I'll get a little bit of a cushion, and that will allow me to continue reinvesting my dividends and just growing from there. Dividends, distributions, whatever you want to call them. So for some of you, if you've just been waiting for a week when you're green so that you can get out because you don't like the movement, you don't like the up and down, and you just don't like the risk, hey, this might be your opportunity because it did recover from most of the distribution already. Now, is it going to continue to recover this following week, before it pays out another distribution? Obviously, I don't know. I can't tell you that. So if you are nervous and you don't like being in Alti, now's your chance to get out because you might be a little bit in the green. So go back and do your math. I calculated my internal rate of return, which is basically like my return on cash, like what I put in to the fund, because the cost basis that it'll show on your brokerage, it does go lower and lower as you're reinvesting at lower prices, but it doesn't actually calculate what you put in versus what you have now. So if you want to, figure out what your return has been with the dividends, then you either need to go to your brokerage account website and see if they have an internal rate of return, IRR return function so that you can see, or you're gonna have to do some math. Go and figure out how much you put in out of pocket and then subtract that amount from your total value right now, because otherwise it just shows you as reinvesting your dividends. Those show as new purchases, which they technically are, but it's money that came out of the fund already. And so I want to see how much I got on the money that I put in. And so on that, I've got a $23 across 3 accounts. I've got a $23.71 gain and 0.09% return. Now, for me personally, this is still not good. I would actually consider this a little bit in the red, even though it's not, but I would consider it that because I actually am showing a small loss in my IRA, and then I am showing a small gain in my taxable account. And so really, if I were to sell all of that, I would be paying, a couple dollars in taxes. And so that would actually be a negative return after taxes. So make sure you take that into account too. But I wanted to go over, I started buying covered call funds. Well, I bought RDTE, the Roundhill 2000, Russell 2000 fund. I started buying that back in April at a higher price. And I just kept cost averaging down a little bit. I don't have a lot of all of these funds. But most of them I bought in early July. So it's a pretty good picture of how they've performed all together. So I've got 26 of these funds, and I sat down, I did the math. I'm just sitting here in the hotel room this morning, and I did all the math to figure out my internal rate of return on all of these funds, and I'm gonna share them with you. Now, I don't have the same amount in all of the funds, and so that number is not quite as important as the percentage, but I calculated the percentage for you too, so we can see which ones are the best performers and which ones are the worst performers, and we'll go over that after we go over the numbers from all of them. So like I said, I bought 26 of these covered call ETFs so that you don't have to. And I have to tell you, I think the haters are wrong on covered call ETFs. A lot of them show up and just say, oh, they're just gonna go straight down. They never recover from the distributions that they pay. And that is obviously not always the case. It can be the case, especially if we were in a bear market, or if we were in a prolonged downturn, but that has not been the case for me. I've only had these funds for, 2.5 months, and I've already got a pretty good return on some of them. Of course, some of them are losers too. So I've got my Best Westerns rewards. I'm not even at a Best Western. This was just in my travel bag. And so I had this little notepad, and that's what I've got because I left my little flowery notebook at home. So I don't know if you could trust these facts because they're not coming out of the flowery notebook. But Gag's still at home, you know, drinking her cheap vodka and Pall Malls. And I'm out here on the road making that cheddar. So we've got these numbers here. My ULTY, we already went over that. I've got a gain of $23.71, which is a measly 0.09% return. But it's green, so we're happy with that. AIPI, I've got a lot less of that, but it's had a $23.76 gain for 2.7%. That's not really all that bad considering it's only been 2.5 months. You know, that's like 12% return annualized-ish. AMDY, I kind of got smacked down on that one. I've lost $16.81 for a negative 8.8% return. 8.8% is significant. Luckily, I don't have a lot of money in there, but if I had, you know, that'd be a pretty big downturn. CHPY, I know that's one of the recent favorites, and I do think I'll be building into that position. I've got $26.52 worth of gains in that one for a 4.9% return. That's not too shabby. Coney, C-O-N-Y, 21.65 loss. That's negative 20.89%. Ouch. Luckily, I didn't have very much in that one. Here's one of my favorites, and I've talked to you about it before because I like the idea that it's kind of betting against the dollar because the dollar's just doomed. But it does use synthetic positions, and so it's a little bit more risky. And I honestly can't tell you. I'll have to go through each of these individually for videos because I can't tell you which all are synthetic positions. I think most of them are. But GDXY is one of my favorites, and I've had a $410.59 gain on that, which is 17.28%. So that one has just been screaming. 17.28% in, you know, a couple months, and I've been buying extra of that as it goes too, so I haven't even had all the shares for that long. So 17.28% for, you know, an average of 2 months. Ooh, that's 116% annualized. That's pretty dang good. Now, is it going to continue to do that? Probably not. I mean, gold has been really doing well. I think gold will continue to do well, but it's going to have some down weeks. It could be, you know, if the market actually gets smacked down, then gold will probably go down too because everything just seems to kind of go down in unison initially. So we can't count on that for being a full annualized return, but we'll see. IWMI, I'm going to add to this position too. That's another, I think that's another Russell 2000. And it's up $3.61 for a gain of 7.83%. That's pretty good. IWMY is up $1.03 for 4.3% gain. JEPI, is up $1.60 for 1.4% gain. And you guys have to forgive me for the shaking and the switching hands when my arm gets tired here. I left my tripod back at the house, so I don't have any way to hold my phone. I looked around the room here to see if there was somewhere I could set it, and it's just not eye level. IWMY, JEPI. We were on JEPI for $1.60 gain and 1.4%. You know, it's not great, but it's not bad either. Beats a CD. JEPQ. $137.38 return for 10.57%. So JEPQ is definitely one I'm going to be looking to add to. LFGY. A lot of people are happy with this one. I am not. I'm down $11.10 for a negative 2.84% return. It's not really that great. NVDY hasn't hurt me at all. It's up $16.27 for me at a 4.81% return. Annualized, you're looking at, you know, that's going to be over 20%. So that's not terrible. Flip it over to the other side. 26 of them is a lot. I had to do a lot of math. I haven't done that kind of math since I was in high school. It's been well, I take that back because I have had some jobs where I had to do a lot of math. OMAH, that's the one where they're like trying to do the Warren Buffett type fund. Up $9.13 for a 2.34% return. That's one that if you want to be a little bit more conservative, I think that might be one that you could look at. And I think they're trying to shoot for a 15% payout on that one. So, that might be one that's a little bit more stable, something that you might be a little more comfortable with if you're living off the income. PLTY, that's Palantir, $42.02 I've made on that for a 6.22% return. That's not terrible. QQQI, another one of my favorites, and another one that you might look at if you want something a little more stable. Like, I like putting money in these things that are riskier, but I'm not going to go and shovel like boatloads of my portfolio in any of them. Alti is my biggest, and it's still just a smaller portion of my portfolio, but it's on the top end of the range of something that I'd want that was riskier. QQQI has had a $61.18 return for me for 3.51%, which is not bad because a lot of those shares were bought more recent because I've been adding to it as I get a little bit more money in my account, like dividends that paid out that didn't get reinvested and stuff. SPY, $28.13 gain for 5.56%. So I'll be adding to that one as well. That one's on the S&P 500, I believe. SVOL. I only have one share of this. It's a short volatility fund. It's down $2.47, which is 11.59%. So not too great. I'm not going to be putting any more money in that unless I see it turn around. TQQY is up $10.35 for a 5.33% return. And we know Tesla has been screaming. So I've got TSII, that's up $111.08 for a 24.42% return. I'll have to look through these numbers real quick at the end. That might be the best performer so far. XBTY, with Bitcoin kind of going up and down wildly, I'm kind of surprised this one's in the green. It's especially after we saw, after we saw what Misty did. Oh shoot, I don't even have my Misty position on here. I'll have to go back to that. I probably just blocked it out of my mind because gross, right? Misty is not doing great. It looks, just offhand, it looks like I've lost $120 on Misty, which is going to be like a little over 20%. So Misty has really hammered me. Not very happy with that. But XBTY is up $1.96, which is only 0.77%, but at least it's green. So maybe if you're looking for exposure to Bitcoin, you're better off going with YBTC or XBTY, because my YBTC is up $3.96, which is 1.59%. So, Misty has a huge payout, but overall I'm down a whole lot on it. So if I were to get more Bitcoin exposure in a covered call ETF, I think I'd go with XBTY or YBTC. YMAG, which is the Magnificent 7 covered call ETF, is up $32.43, 5.25%. Not bad at all. YMAX, which I had kind of high hopes for because I figured all their funds together might perform well, it's not done that great. It's still in the green, 2.47 with a 0.44% IRR for me. So, it's been better than Alti, but it's not great. And YSPY, YSPY, which is another S&P 500, is up $13.94 for 6.79%. So you can see some of these riskier names, even though they have huge payouts, overall, I've still made a higher total return on some of the more conservative funds. So we're going to say that TSII has been my best performer, 24.42%, but it's not my favorite. My favorite has been GDXY. Like I said, I like gold. I would add more to it, and I would be more comfortable adding to that than a Tesla position. But I also am very impressed with JEPQ, JEPQ, and I think I might be adding to that position. I like that a lot. My worst performer is either CONY or Misty, with over 20% losses on those two. So take that for what it's worth, and let me know what your best performer as far as covered call ETFs have been down below. And if I don't have one on the list that you think that I should get, mark that down in there for me and others to see as well, so that we can get them gains. All right, guys, I'll talk to you D-Gens later.